Happy Halloween. Talk about a great start to the stream today, huh? Let's see. Test to make sure. Good morning and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. Today, we're going to be talking about, of course, the Bitcoin white paper because it is the anniversary. And we have a few other topics to cover, including, of course, more miners that are failing and unable to fundraise. And then, of course, the economy failing because that continues to happen. Multiple different economies. And the Naira has crashed to 800 per dollar now. And Robert Kiyosaki says we're in for a huge crash in the stock, bond, and real estate market. He's kind of been saying this kind of off and on for a while, so we're going to take a look at what he's talking about and get his thoughts and opinions on that. So lots of fun stuff, but you know, we are kind of in that situation where, yeah, it's not a ton of fun to talk about everything that's happening right now. In the world. There's some always light at the end of the tunnel though. Just keep your head up and we'll keep moving forward and go from there. But let's go ahead and get the ad rolling right after. Let's get the ad rolling and then we will hop into today's show. I don't have a ton today, but we have a little bit.
Established in 2017, Octominer is an international mining hardware company. They manufacture and engineer the best mining equipment in the industry and supply rigs to some of the largest mining farms around the world. Their GPU mining rigs also integrate with the top crypto operating systems like HiveOS, MinerStat, and Simple Mining. All parts come with an international 1-year warranty. Exciting news! They will be adding ASIC miners for sale to their website soon and launching a new product built specifically for ASIC home miners. Please visit octominer.com or email support@octominer.com for questions.
All right. Welcome back. Check out Octominer down in the description below. So the Bitcoin white paper celebrates its 14th birthday. A technical manifesto, the Bitcoin white paper, was released 14 years ago today. Let me get this alerts turned off there. Boom. All right. We can do it. We had a busy weekend. Yeah, so a technical manifesto, the Bitcoin white paper, was released 14 years ago today under an MIT public license for all to learn from, share, and enjoy. Quote, I've been working on a new electronic cash system that's fully peer-to-peer with no trusted third party, end quote. Those were the words pseudonymous Bitcoin creator Satoshi Nakamoto used to greet the world some 14 years ago in an email releasing the Bitcoin white paper. To this day, nobody still knows who Satoshi is. Since April 23rd, 2011, nobody has heard from him, her, or them after they signed off an email saying, I've moved on to other things. It's in good hands with Gavin and everyone. A technical description, the Bitcoin white paper, was the first document to outline the principles of a cryptographically secured, trustless, peer-to-peer electronic payment system that was fundamentally designed to be transparent and censorship resistant, as well as put financial control back in the hands of the individual. At that time, the world was gripped by a financial crisis catalyzed by excessive speculation in the financial markets and banks risking millions of dollars worth of depositors' money. This document laid the foundation for what is generally considered the first functional digital currency powered by a distributed ledger technology called blockchain. One of the many groundbreaking elements of Satoshi's electronic payment system was that it solved the long-standing double spend problem that plagued cashless spending. Through the implementation of timestamped transactions that are unanimously verified by a distributed network of validators, it was no longer possible for a person to spend the same funds twice. The white paper was released under an MIT public license in 2008 for all to learn from, share, and enjoy. And we do have the Bitcoin white paper up here. You can go read the whole thing if you like, and it's linked down below. It's just 9 pages, but really the big thing is the abstract that we always harp on here. And we'll kind of get into it because obviously the inception of Bitcoin from the very get-go was around, basically financial struggles, essentially in 2008 from the housing crisis and so on. And I would say that we're going to be going through essentially some financial struggles here through 2023 as well. It's definitely looking like that. We're going to be talking a little bit about that today. So spooky Halloween. Welcome. Happy Halloween, by the way. And there was this idea to a certain extent that Bitcoin would be a way to protect people, the average person, from, large companies and large banks manipulating money and causing these kinds of financial crises. We're not so sure that's the case though, right? Like as we look at it over the past year or so in relation to inflation and everything that's going on with the economy, it's under question, right? A lot of people are saying that what we are seeing is Bitcoin correlated to the traditional markets. And that may be true, that may be not true, depending on how far back you look, right? So if I look at something like the back till June, and we'll talk about this in a second, it kind of looks like it is still following its own halving cycle. But the big thing is that understanding it, I guess, at least from this perspective, is that the original inception of Bitcoin was 4 times like this that we're in right now, which makes it really interesting. The abstract says a purely peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without going through a financial institution. Digital signatures provide part of the solution, but the main benefits are lost if a trusted third party is still required to prevent double spending. We propose a solution to the double spending problem using a peer-to-peer network. The network timestamps transactions by hashing them into an ongoing chain of hash-based proof of work, forming a record that cannot be changed without redoing the proof of work. The longest chain not only serves as proof of the sequence of events witnessed, but proof that it came from the largest pool of CPU power. As long as a majority of CPU power is controlled by nodes that are not cooperating to attack the network, they'll generate the longest chain and outpace the attackers. The network itself requires minimal structure. Messages are broadcast on a best effort basis, and nodes can leave and rejoin the network at will, accepting the longest proof of work chain as proof of what happened while they were gone. And really the big thing here at the very beginning is what you're looking for is there was essentially, at a certain point, you have credit cards that are able to do digital transactions, but they require a third party. And that is because the third party needs to be able to prevent double spending and run its checks and balances. So the goal was to flip that on its head and provide a system that didn't require somebody to prevent that. And that is why you had this original white paper come out and it explained as such. And the importance here too to note is the involvement of both proof of work, right? And the involvement of the nodes. So a lot of people get nodes confused, I think, a lot of times, because when we're talking about like providing consensus to the network, people will be like, well, you know, miners provide consensus, but that's not necessarily true. Nodes provide consensus, miners mine to a node, and then the miners take the work and surface that to a node, and then the node shoots that signal out to all the rest of the nodes on the network, and then they find consensus. So it's a little bit of a nuanced position there, not a nuanced. It's a little bit of a technical description there. I don't know why I said nuanced position. It's a little bit of a technical description there that I wanted to clear up for a lot of people, because there seems to be like this misconception a lot of times that the miners are doing all the consensus. And that's not necessarily exactly how it's working, right? The nodes are going to be able to provide consensus between each other, even without proof of work. That's how it works within proof of stake as well. But there is like some form of solving that has to be done even within a proof of stake network. It's just, how is that centralized, right? So you utilize less power because you are essentially utilizing virtual private servers on proof of stake, but you are still using computing power, right? If we're being completely honest at the end of the day. Anyways, Bitcoin is here. It does appear to be here to stay. And the question is will it have any sort of impact on the way we function day to day? And I think that's something that people have been asking for a while. And as we kind of move through, I think, as we see it, a restructuring of the way people interact with each other, both financially and across borders, is kind of when we start to see cryptocurrency move into its next phases, right? So as we sit right now, what we are seeing is kind of a restructuring of our economic positions across the world, right? We have a lot of economic strife being caused by, whether it be by Ukraine and Russia, or by BRICS, or by BRICS and the reserve currency, right? Or the lockdowns in China and everywhere else that cause supply shortages and so on, or the mishandling and misprinting or overprinting of money in general, fiat currencies. All of that is kind of coming into a head to where cryptocurrency starts to actually make sense to some people. The latest example of this, right, would be the collapse of the Argentinian dollar, where essentially the money was worthless, and the people that lived there, the citizens of Argentina, needed a way to protect their capital. Well, to protect your capital, you actually had to already be of a certain ilk, right? You had to be basically more financially well off to have access to a financial institution that had access to the US dollar, so that you could put your dollars into the US dollar, your Argentina dollars or whatever, into the US dollar, so you could protect it. So unless you were upper class, you didn't have access to these financial institutions. Now, crypto, of course, provided a way through stable coins and exchanges for anybody to be able to participate within basically participate within protecting their capital. And so you ended up in a position where, yes, we already are seeing cryptocurrency utilized in this manner. And the question is will this follow through to the rest of the Western world, or does everything or is it basically just a tool to access the US dollar, right? So when we talk about cryptocurrency right now in general, especially as it pertains to putting power back into the hands of the individual, right? Putting financial power back into the hands of the individual, there are steps to that, right? You don't just race directly to Bitcoin and all fiat disappears overnight and everybody lives happy-go-lucky, and there's no financial institutions or governments or nation states controlling anything anymore. That's not how the world works. It never will work that way. It will always be somewhere in between, and a step in between, A and Z, right? So we could be on step C or D or whatever it may be, but what are we seeing, right? We are essentially seeing people access the reserve currency of the US dollar through cryptocurrency and not having to utilize financial institutions to get there, which is kind of the first step. That's a big deal. Like, that is not something that would have been able to be done without cryptocurrency. And so, yes, cryptocurrency is having a very direct effect on, essentially the global macroeconomics at the end of the day. And then if we take that even further, we start to see what happens with sanctions, and things get even more weird, right? So if we take a look at something like Russia and bypassing essentially sanctions with Bitcoin, that is something to bring up as well. And there are people on both sides of the fence here on whether you should allow sanctions or allow cryptocurrency to be sanctioned or not allow it to be sanctioned. And that is a debate that we've definitely had on this channel. The point, though, that I'm trying to make today is the utilization of it, right, to essentially bypass traditional financial institutions. So I'm not really going to go there. As far as from the miner perspective, though, it is important to point out that Russia is utilizing essentially Kazakhstan by sending money to them to build up their power so that they can mine. So almost a proxy power of Bitcoin hash rate going from Russia to Kazakhstan, which is interesting. But what we are seeing is a shift in the way that capital is handled, and essentially basically countries interact with each other. Different currencies that we're seeing interact with each other differently as well. And I think paying attention to it's going to be really important, especially as we see things like this, right? So the Naira crash, I'm probably pronouncing this Naira crash, probably pronouncing this incorrectly, but it crashes to 800 per dollar. The governor of the central bank, Goodwin Mfield, announced on Wednesday that new Naira notes. I'm just going to go ahead. We're going to Google it here. I'm going to Google it and get it right so I don't mess it up. I knew I wanted to Google this beforehand, but I did not. Let's see. Pronunciation. We'll do it. We got this. Watch. No.
Naira.
Naira. That makes more sense. There we go. That feels better. Okay. Feel better about this. The Naira's downward spiral has reached another historical low under the President Muhammad Buhari regime. Currently trading at $800 again, or $800 against the dollar on the parallel exchange platform Aboki Forex. People's Gazette checks on Saturday revealed that the current parallel market rate is N800 to a dollar and N890 to British pound sterling. The Gazette had reported on Friday that the Naira, which had been consistently dropping in value, exchanged at 785 against the dollar. The free fall continues as the ban on the free fall continues as the ban on Bureau the change operators remain in place, and the Mr. Buhari regime announced plans to redesign the country's currency in response to the country's economic woes. The governor of the central bank, Goodwin Mfield, announced on Wednesday that new Naira notes would be issued by December 15th. Mr. Mfield stated that the move, which has since been approved, Mr. Buhari and other stakeholders was certain to boost the value of the Naira. Following the latest announcement, politicians have continued to approach BTC operators to easily convert their soon-to-expire stockpiled Naira to foreign currencies, as the apex banks gave all Nigerians 6 weeks to return all old Naira notes to the bank's vault. In 2021, the CBN prohibited the sale of foreign exchange to BTC operators in a bid to arrest the fast fall of the country's currency. The Apex Bank had accused the BTCs of unauthorized sales of foreign exchange above the market they were authorized to serve. BTC operators were a significant part of the black market before the ban, helping people who couldn't legally access foreign currencies directly from the CBN to maintain their exchange rates. Once again, what are we seeing? We're seeing a repeat, right? The people that are at the bottom, accessing the black market to try to get foreign currencies are not allowed to access foreign currencies. You let the people suffer while everybody else at the top, the government are able to basically bypass all of that, well, because they're in control of the government and in control of the printing of the currency and so on. And so when we talk about where cryptocurrency will be, I think, utilized most as things move forward, it's going to be in, basically third world countries first is where we'll start to see it apply, right? Specifically, we're going to see it apply with, essentially countries that are failing economically, and with the people within those countries that are failing economically opting out of their fiat system and into a crypto system. Now, initially, like I said, what I think that looks like is them utilizing cryptocurrency to access other currencies like the US dollar. And then from there, we'll see it kind of consolidate somewhere else. So the idea is that everybody starts to consolidate into a reserve currency through cryptocurrency like the US dollar. So you have a whole bunch of USDT or whatever it may be. And then what you have is once you start seeing competitors in reserve currencies come out, which are in the works right now with BRICS, for example, in Saudi Arabia and Russia and China and Brazil with BRICS. And then just the plain fact of the matter that Saudi Arabia is talking about just accepting the yuan straight up, with about 20% of the total revenue there coming from yuan instead of the US dollar. If we talk about those things happening, what ends up happening is that the strength of the US dollar is decreased. If you get to a position where the US dollar or all the reserve currencies are quite weak, you do end up in a position where, yes, people could opt out from even utilizing the stable coin to moving to a different reserve currency. The idea here is that reserve currency would be Bitcoin, not a transactional currency. And obviously this isn't financial advice. This is just the theory behind everything, so you guys understand what is going on when people talk about essentially a consolidation into the US dollar, specifically into stable coins, right? So you have all the third world countries, all of the poor start moving everything into cryptocurrency, into stable coins, specifically like US dollar backed stable coins. And then they're in that cryptocurrency ecosystem. And then the US dollar starts to lose value. They look at that in comparison to something like Bitcoin as the reserve currency. And because they're already within the crypto ecosystem, they move everything into the reserve currency of Bitcoin. And that is where you end up. This is the theory. So will that happen for sure? No, I don't know that. All I know is that right now, if we look at it, we do have examples of people opting out of traditional traditional fiat currencies and opting into essentially basically stablecoin US dollar backed cryptocurrencies. And we do see some things on the horizon that point towards the weakening of the US dollar. That's what I am aware of, right? Now, of course, there are other people. One of my favorite books for a long time was Rich Dad, Poor Dad. It's Robert Kiyosaki. I do follow him on Twitter. I do understand that he's controversial as far as all that goes. A lot of people will say that he's engagement farming, that sort of stuff. I think that he still brings up good points, and it is interesting to discuss his warnings when it comes to stocks, bonds, and real estate. And let's pop into it. So Robert Kiyosaki warns stocks, bonds, real estate will crash as Fed continues rate hikes, and he advises to buy Bitcoin before the Fed pivot. The famous author of the best-selling book, Rich Dad, Poor Dad, Robert Kiyosaki, has warned that stock, bond, and real estate markets will crash as the Federal Reserve continues to raise interest rates. Noting that the Fed will pivot, he advises investors to buy Bitcoin. The author of Rich Dad, Poor Dad, Robert Kiyosaki, has advised investors to buy Bitcoin before the Fed pivots, reiterating that the Federal Reserve's interest rates hikes will destroy the U.S. economy. Rich Dad, Poor Dad is a 1997 book co-authored by Kiyosaki and Sharon Lecher. It has been on the New York Times bestseller list for over 6 years. More than 32 million copies of the book have been sold in over 51 languages across more than 109 countries. Kiyosaki tweeted early Saturday morning that the prices of gold and silver are plunging as the Federal Reserve continues to raise interest rates. He warned that rate hikes will kill the U.S. economy, cautioning that stock, bond, and real estate markets will crash. He stressed that the Fed will pivot, advising investors to buy gold, silver, and Bitcoin before the Fed pivot occurs. Many economists and strategists have predicted that the Fed will not pivot anytime soon. Strategists and fund managers told Reuters Global Market Forum Friday that a Fed pivot is not on the horizon, even as over-tightening risks loom. They believe that there is a greater chance of the Federal Reserve raising interest rates too far and tipping the U.S. economy into a recession. Bank of America strategist led by Michael Hartnett wrote in a note Friday that it is too early for a Fed policy pivot, absent sudden collapse in inflation and payrolls. JP Morgan strategist Julia Wang said Thursday that a Fed pivot is unlikely in the near future given persistent inflation. She told Bloomberg, quote, "For us to get to a point where labor market conditions are more fundamentally consistent with the Fed's inflation target, we think will probably take us to the end of the year." So hence that's why we expect a pivot really only in Q4 of 2023. This was not the first time that renowned author said Fed rate hikes will destroy the U.S. economy. He gave a similar warning in September. Last week, Kiyosaki said the U.S. dollar is toast, citing Saudi Arabia's request to join the BRICS nations. Moreover, he predicted that the U.S. dollar will crash by January and warned about World War III. The Rich Dad Poor Dad author has been pushing Bitcoin for quite some time. Earlier this month, he explained the reason he buys Bitcoin. He has distinguished the largest crypto from fake money on several occasions, emphasizing that the end of fake money is here. Kiyosaki also recently urged investors to get into crypto now before the biggest economic crash happens. Now, of course, everybody's going to say, well, it's following regular markets. Bitcoin will just crash with everything else, like the stock market or the tech markets, right? So still want to go over this again with you guys because I still think that it's relevant and extremely interesting. And I took a cayenne pepper supplement. Not a good idea. I'm sweating, so give me a sec. All right, so if we take a look at Bitcoin over the past 6 months, you'll see here this is kind of that big dump in June that we've been talking about. And then for the most part, kind of moving sideways. If we compare that to the Dow Jones over the past 6 months, it's not really correlated directly, right? Now, these percentage numbers are always going to make things a little bit harder. We go over the past 6 months here as well. Dow Jones and S&P 500 look correlated. Bitcoin doesn't really, right? But it's interesting that what we are going to see, I think, is whether or not Bitcoin will end up being in a position to, or cryptocurrency in general being in a position to basically do what it was created to do, right? Because it was created essentially in response to the 2008 financial crisis and was supposed to be a way for people to kind of opt out of that system. Will people start utilizing Bitcoin to opt out or will they not, right? I think like a lot of the problem too is like when people tell you to like, well, now's a good time to buy Bitcoin or whatever it is. It's like, yeah, but we're all too broke to do it because there's no capital left, right? So it's kind of a funny position to be in. I think there's also the note of transactional, right? So I wanted to talk about that too, because we were talking about Bitcoin being the reserve currency as the reserve currencies fail elsewhere, right? But there is the idea that we still have to have a transactional currency. And while there is the Lightning Network, a lot of people tout and hold up, I think just because of the nature of Bitcoin, people aren't going to want to transact with it as much. Now, of course, we could say maybe it's the Dogecoin, but that is kind of a whole other talk that we could get into. And this cayenne pepper is burning my esophagus, so I'm going to drink some water. Holy moly. I will never do that again, boys. Never, ever, ever, ever. Don't take that supplement before you stream. Bitcoin miner Argo's $27 million fundraise falls through and shares plunge. So as we talked about last week, unfortunately, we are seeing more Bitcoin miners fail. Last week was Core Scientific, and now we have the Bitcoin miner Argo. The Bitcoin mining industry is battling soaring energy prices coupled with the stagnated value of cryptocurrencies. Argo Blockchain said a deal to raise 24 million British pounds from a strategic investor has fallen through, sending the Bitcoin mining company's shares tumbling as much as 72%. The London-based firm, which earlier this month signed a letter for intent to sell 87 million shares to the investors as it looked to ease liquidity pressures, didn't say why the agreement had been called off. It is working to secure other deals to provide working capital for the next 12 months. Quote, should Argo be unsuccessful in completing any further financing, Argo would become cash flow negative in the near term and would need to curtail or cease operations, end quote, it said in a statement to the London Stock Exchange. The Bitcoin mining industry is at a critical moment as it battles soaring energy prices coupled with the stagnated value of cryptocurrencies. Last week, Core Scientific warned investors that it may have to consider bankruptcy, while in September, crypto mining data center Compute North filed Chapter 11 bankruptcy after it emerged that it owed $500 million to at least 200 creditors. Argo shares fell to the low as 4.25 pence and were recently trading about 7 pence. They have lost some 92% this year. The miner did not immediately respond to CoinDesk's request for comment. In an attempt to secure short-term liquidity, Argo sold 3,843 Antminer S19J Pros for $5.6 million. It had previously intended to sell 3,400 miners for $7 million. The miner did not immediately respond to CoinDesk's request for comment. Now, we've actually had the same strategy for a very long time, and I would say, as a cryptocurrency miner, I've had the same strategy for a long time. It seems to be correct. I've made one big mistake, and we've talked about that, which is getting the facility and renting it, right? I should have tried to purchase power or something, figure something else out. But the strategy goes like this. You purchase during the bear market. You do not purchase more than you can afford. And you don't buy anything on credit, right? And then you mine through the bull run, and then you just rinse and repeat. You could basically, as a miner, compound that by, if you see Bitcoin triple from its previous all-time high, sell all your equipment at the high and cut out. We could base it off of that too with the halving cycle. There is not apparently one Bitcoin miner that paid attention to the halving cycles at all. A ton of them got super greedy, and it's kind of to the point that's extremely interesting because we were getting into a position where it looked like, for the most part, unless you had like access to large capital, access to a power company, access to a government, something like that, you couldn't compete within Bitcoin. And I think that's still true as of right now. However, there does seem to be just massive failures across the board for all these large companies that got extremely greedy. And this could put it into a position where Bitcoin mining could become lucrative for, medium-sized businesses, right? Again, and there is possibility for that, and I think there is some light at the end of the tunnel for it. So it's like when you see this type of stuff, it's kind of positive to a certain extent. Yes, you don't want to see big companies fail and everybody that works at those companies are hurting and so on. That's not what I'm saying necessarily, right? But if we look at like where you would want to be from a fundamental perspective for Bitcoin and where it's been over the past few years, where just large greedy companies are taking everything and sucking it all up, driving the prices on miners way up, you go, well, was this really the fix we were looking for in cryptocurrency, right? But then you see this halving cycle that everybody seems to be aware of, but nobody pays attention to, come in and just absolutely decimate these large companies that didn't plan accordingly. And it's pretty weird, to be honest, because like I said, it's one that we're all fully aware of. I'd like to hear your thoughts and opinions in the live chat and the comment section below as it pertains to large mining firms going under. Yet another one. Now, if you guys are familiar with Ergo and Neta, we have some wrapped Bitcoin almost ready to go on a Neta BTC. So this has been like basically in the works for a long time. And I have more heartburn. This is rough. Ooh. They're like, hey, just take these supplements. It'll be good. You should always test your supplements on a day you don't have to do anything. Ooh. I feel cayenne pepper, dude. I am starting to pour sweat. So the Ergo blockchain does not currently have wrapped Bitcoin available. There's a project called the Neta BTC, which we also utilized on a pool called the getblock.io pool. You could mine some of their governance token, and they apparently have a successful Bitcoin deposit for a Neta Bitcoin or wrapped Bitcoin. There we go. On, I think, Cardano. And they will be doing it on Ergo as well. So this is pretty bullish for a Neta BTC. They've got the tech working, and I think you should be paying attention to it. And more bullish news from another proof of work GPU mineable coin. We got Flux. Yep, I'm gonna barf. I'll be right back. Holy shit. Excuse me, guys. Holy, I just bugging. Yeah, that's the F word. That's worth it. Holy shit. Well, if you guys want to get cleaned out real good, I can send you a Amazon link to these cayenne pepper capsules. My whole body's on fire, bro. I just like vomited straight cayenne pepper. I feel like drinking milk would make my stomach even more upset. Oh, man. Whew. It was like I kept like reading the art. I like tried to struggle through getting through like all the articles and like doing the show, and I'm like, I'm not feeling good. I'm not feeling good. I'm not feeling good. Oh. Oh, man. It's supposed to help bring the immune system back up. I've been on, you know, I'm on the last set of like antibiotics and stuff. Yeah, so I was just like trying to get some stuff that helps boost the immune system. So this is a fun stream. I'm sorry, I can't hop back into reading yet. I gotta chill for a second. That came out like I have not vomited in years. Like years. Whew. Oh, man. I'll be fine. That was just like, I think, cayenne pepper. But I mean, like, we have all the announcements done. The only other announcement really that I was going to cover was the snapshot for Flux. And no, I mean, I do echinacea and elderberry as well. Let's see. Let's just go into questions and answers. Well, no, let's go into mining profitability, and then we'll just do questions and answers, and we'll move over to yeah, let's get into mining profitability or lack thereof. Interestingly enough, things are looking pretty good. Did we get a boost in? I think we did. All right, let me run the ad and we'll be right back.
Established in 2017, Octo Miner is an international mining hardware company. They manufacture and engineer the best mining equipment in the industry and supply rigs to some of the largest mining farms around the world. Their GPU mining rigs also integrate with the top crypto operating systems like Hive OS, MinerStat, and Simple Mining. All parts come with an international 1-year warranty. Exciting news! They will be adding ASIC miners for sale to their website soon and launching a new product built specifically for ASIC home miners. Please visit octominer.com or email support@octominer.com for questions.
Alrighty. At least I'm not pouring sweat anymore. So that feels good. Mining profitability. Let's get the RTX 3090 up on this. Correct that. And that. ProgPal and Firo proof of work. 10 cents a kilowatt hour. And I think Ergo. Oh, no, it wasn't. I read it wrong earlier. Equilibria is losing the least amount of money at 20 cents a day. Vertcoin in second at losing 25 cents a day. Conceal in third, losing 25 cents a day. And Ergo has moved up quite a bit, though. It's only losing 30 cents a day. Par for the course, you know, we scroll down. Flux losing 35 cents a day after power at 10 cents a kilowatt hour. And Ethereum Classic kind of bottom of the pack, losing 44 cents a day after power. Mining pools, we're up 5% over the past 7 days on Bitcoin, with the hash rate sitting around 270 exahash a second. We have gone up, I think, pretty significantly over the past 7 days on Bitcoin. So it's starting to cool down. I don't know about y'all, but we have a really cool day outside today. So there's that. Let's go ahead and hop into Ethereum. Ethereum Classic is at 155 terahash a second and is up 6% over the past 7 days. Ethereum Proof of Work is up 2.33% over the past 7 days and is at 35 terahash a second. And Ethereum Fair is at 4 terahash a second and down 9% over the past 7 days. Take a look at Ergo, which is down 2.39% over the past 7 days and is sitting at 46 terahash a second. Flux, we would expect 7 to 8 mega solutions a second. Yeah, 8 mega solutions a second and is up. It's had a good pump over the past couple days too, but up 8% over the past 7 days. There you go. As far as Flux is concerned, we'll take a look at Ravencoin, which is up 2% over the past 7 days and at 15.5 terahash. ASIC miner profitability, the Antminer L7 is in first place, as would be expected with the recent Dogecoin pump. And then scrolling down from there, we have the D7 in second place, making $11.34 a day on Dash. The iPolo V1 making $3.36 a day on ETP. I don't actually believe the Mining Rig Reynolds one. I would say the iPolo G1 is probably actually in third at $6.66 a day in Grin. Hey, $6.66 on Grin for Halloween is pretty funny in general. Goldshell KD6 making $4.84 a day. And then scrolling down from there, the S19 Pro is at $1.53 a day on Digibyte. We've been utilizing the RTX 3090 since the launch of the 3090 is why. So really it's because the 3090 came out before the 3070 is the reason why we utilize it. Let's move into questions and answers. I think I am going to move us on over to Twitch here, and I'm going to take a little bit of a break. I want to thank everybody for understanding for a short show today, but I'm going to need to go maybe just take a deep breath, do some meditation for like 10 minutes. We're going to move over to twitch.tv/blindrun at 11 o'clock. But I think I'm toast for right now. Yeah, I need to take some deep breaths. That was brutal. Thank you everybody for watching. Thanks for all the support. Be sure to hit that like button if you don't mind. If we could get over 100 likes, that'd be awesome. It's been a struggle, obviously, and then having some times like today does, makes the struggle harder. We're going to be talking about some GPU mining stuff that I'm looking at over on Twitch a little bit later. So I will get you guys the Twitch info here. And I'm just going to recover for a little bit. I'm not sick, I don't think. I mean, I do still have like finishing up bronchitis, but I don't think I'm sick. I think that was just fucked up. There's no Mike Wright on the NASDAQ. If you look at the chart, it looks the same, so I don't believe it. It looks the same as the S&P and the Dow Jones. But you're talking about tech stocks, yeah. I'm just going to take a bit, and we'll be back on Twitch here in a little while. Thanks, everybody, for watching. Be sure to hit the like, comment, subscribe, and I will see you.